Conventional wisdom tells us to work smarter, not harder. But how? One way for investors to do so is with passive income, which is derived from ownership rather than labor or active involvement in an enterprise. And one way to create such a stream of passive income is by owning stocks with generous and reliable dividends. How would you like an extra $10,000 per year in passive income? Sounds crazy, right? Well, believe it or not, generating that much dividend income is possible. Most people think you need millions to make any meaningful passive income. But the truth is, with the right strategy and investments, even a modest sum can generate a substantial stream of dividend payments year after year. Imagine having an extra $10,000 hitting your account automatically, without you lifting a finger. That's money you can use to pay bills, fund your retirement, or just enjoy life a little more. And the best part is, it's tax-advantaged income that keeps compounding over time. Welcome to MoneyWise Investor, your trusted source for financial information. In this video, we're going to show you exactly how to make a $10,000 per year passive income stream by investing in some specific dividend-paying stocks. This isn't some get-rich-quick scheme. This is a proven strategy that takes advantage of the incredible power of dividend investing. Investing for passive income through dividends is attractive for a few key reasons. First, it allows you to diversify your income streams beyond just your job or business. Having multiple income sources provides extra financial security. Second, passive income acts as a cushion against unexpected expenses or periods of lower earnings. It's money you can rely on, no matter what's going on in your life or the economy. Third, dividend investing reduces stress and anxiety around money. With that reliable passive income rolling in, you don't have to obsess about every penny or work ridiculous hours just to stay afloat. Fourth, dividend stocks tend to be established companies that prioritize steady growth over wild swings. That long-term focus on sustainability can help your portfolio grow consistently over decades. And finally, the real beauty of dividend investing is the path it provides to true financial freedom. With enough passive income from dividends, you'll eventually be able to cover all your living expenses without relying on a job at all. You can retire early, travel, pursue passion projects, true independence. So, how much passive income are we talking about here? Well, the goal we're aiming for in this video is $10,000 per year in dividend payments from 7 specific dividend stocks whose payouts, when combined, can realistically hit that $10,000 annual target. Several are in the energy industry, and a few are struggling at the moment. To reach our $10,000 per year passive income goal, we need to carefully select dividend stocks with seriously impressive yields. These 7 companies fit the bill perfectly. Stock number 1, Bancorp. Can you imagine getting paid over $1,100 per year just from one stock investment? That's exactly what you'd get from Bancorp with its insane 11.2% dividend yield. Barry is an oil and gas company, so you might be thinking, but wait, aren't those companies risky and cyclical? And you'd be right to be cautious. The energy sector is notorious for its booms and busts. But here's the thing. Barry has been steadily paying and even increasing its dividend for over 5 years straight. That's because they've got a low-cost asset base in conventional oil plays out west. They're not some over-leveraged shale driller. Plus, Barry employs smart hedging strategies to lock in favorable pricing and smooth out those commodity cycles we all dread. So even when oil and gas prices tumble, they can keep those dividend checks rolling. Now, $1,120 a year from a single $10,000 investment, that's a game changer for building passive income. Just picture what you could do with that extra cash hitting your account every quarter, like clockwork. Stock number 2, Annaly Capital Management, Inc. Here's a company that'll make your eyes pop when you see its dividend yield, 14.5%. We're talking about Annaly Capital, one of the biggest mortgage REITs out there. You're probably wondering, how in the world can they sustain paying shareholders nearly 15% a year? It's all thanks to Annaly's business model as a mortgage REIT. These unique companies are required by law to pay out most of their earnings as dividends to shareholders. Their whole business is buying up bundles of mortgage debt and earning that interest income spread. So if you've invested just $10,000 into Annaly stock, you'd be pocketing a cool $1,450 per year in dividends from this one holding alone. $1,450 in passive income from 10 grand? Where else can you find a deal like that? Now, mortgage REITs aren't without their risks. They use leverage, and can be sensitive to interest rates. But Annalee is a veteran in this space, with a long track record of navigating the mortgage markets. Stock number 3, Two Harbors Investment Corp. Speaking of insane dividend yields from mortgage REITs, check this one out. Two Harbors, currently paying shareholders over 16.6% per year. Let that number sink in for a second. 16.6%. On just $10,000 investment in Two Harbors stock, you'd be earning a whopping $1,660 yearly in dividend income. $1,660. Like Annalee, Two Harbors is what's called a mortgage REIT. They invest in residential mortgage-backed securities and earn that spread between their asset yields and lower funding costs. To generate yields this high, it involves using some leverage, but Two Harbors actively hedges its interest rate exposure to manage that risk. They've paid steady or increasing dividends for over 8 consecutive years now. Could Two Harbors cut its payout if mortgage markets turn? Sure, that's always possible with any stock. But with these types of yields, you have room for a decent haircut and still come out massively ahead on income. Stock number 4, Plains GP Holdings LP. This next stock is a bit of a mouthful. Plains GP Holding LP. But here's what you need to know. It currently yields 7.3% just in cash distributions to shareholders. Now, Plains GP is what's called a Master Limited Partnership, or MLP. It's a tax-advantaged structure for companies involved in natural resources, like oil and gas pipelines. Instead of paying dividends, MLPs distribute most of their cash flow directly to unit holders, as these tax-deferred distributions. With Plains GP Holdings, a $10,000 investment translates into $730 per year hitting your account. As the general partner of All Plains American Pipeline, PAGP gives you exposure to one of the greatest pipeline networks in the U.S. These critical midstream assets transport crude oil, natural gas liquids, and refined products across the country. The best part about pipeline operators? Their cash flows are mostly fee-based, not directly tied to volatile commodity prices. So you get those lucrative distributions with less risk than explorers and producers. Stock number 5, Hess Midstream LP. Here's another opportunity to tap into that steady midstream cash flow machine. Hess Midstream, currently yielding 7.7% in distributions. HESM is a master limited partnership as well, owning oil and gas processing assets plus pipeline systems in the booming Gulf of Mexico. A $10,000 stake would have you collecting $770 per year in just cold hard cash distributions. You're probably thinking, but I already own some of those big integrated super major oil stocks for income. Why do I need a little mainstream operator like Hess Midstream too? Well, the beauty of HESM is that as a pure-play midstream company, you get to capitalize on America's energy production without taking on direct oil and gas price exposure yourself. They get paid to process and transport the hydrocarbons, not drill for them. Hess Midstream's focused asset base gives you that extra stream of 7.7% yield from a different angle than your conventional producer stocks. It's like adding another layer of diversification to your passive income engine. Stock number 6, Enterprise Products Partners LP. Wouldn't you love to own a piece of the biggest publicly traded company operating pipelines and processing plants across America's major shale regions? That's exactly what you get with Enterprise Products Partners. With a current 7.3% distribution yield, Enterprise Products Partners LP gives investors a chance to tap into midstream cash flows spanning from Permian to the Bakken to the Marcellus and more. Put $10,000 to work in this partnership, and $730 per year starts flowing into your account automatically for just being an owner. That's income earned safely, removed from the risks of wildcatting or chasing exploration trends. You see, the enterprise's extensive network of pipelines, storage terminals, and processing facilities generates predictable fee-based revenues, handling America's insatiable energy consumption. And the majority of that cash gets passed down to unit holders. Enterprise Products Partners LP is a great way to get paid from the midstream value chain, connecting producers to end consumers. You get to profit from rising throughput volumes, driven by strong production growth, without the direct commodity risk. Stock number 7, Eagle Bancorp Inc. Let's round out our $10,000 in passive income with something a little different. Eagle Bancorp, a rock-solid 3.8% yielding regional bank stock. We know, a 3.8% yield doesn't exactly blow you away after some of those double-digit percenters we just covered. But hear us out. Eagle Bancorp Inc. provides some important diversification for our income stream. First, it gives you exposure outside the energy sector that dominates your other holdings. Eagle Bancorp is a DC area lender, profiting from that market's strong economy and real estate activity. Second, as a well-capitalized commercial bank, Eagle provides more balance and lower risk to complement your higher-yielding investments. You still get paid $380 per year in dividends from just $10,000 invested. And third, Eagle Bancorp Inc. has increased its dividend payout for 8 consecutive years and only pays out around 35% of earnings. There's room for strong payout growth moving forward. So while Eagle Bancorp Inc. may not win any dividend yield contests, it shores up your portfolio with a little financial sector exposure, lower risk, and that solid 3.8% income stream that can steadily compound over time. There you have it. Of course, no investment is risk-free. Company fundamentals can change over time, impacting dividend sustainability. But by investing across this diverse mix of sectors and business models, you can minimize your exposure while maximizing that passive income potential. The path to $10,000 in annual dividend income is very real. Build your portfolio systematically, reinvest those dividends, have patience, and watch your income streams grow over time. If you found value in this dividend investing strategy, be sure to give the video a thumbs up and share it with others who could benefit. And if you're new here, go ahead and subscribe to the channel and hit that notification bell. That way, you'll never miss out on our latest videos on building wealth and achieving financial freedom. Thanks for watching, and until next time, stay money-wise.